Guys? My name is Jack, and welcome to Invest Today. Today's topic that we're going to talk about is 5 killer dividend stocks. Now, when you start investing in dividend stocks, there are some cautionary notes. Some companies out there pay 10, 12, 20% yields in their dividends. This I need to caution you on. Young companies, like growth companies that don't pay any dividends, typically take all their profits that they make and they reinvest it in their company in order to grow more in the future. Companies that pay the extremely high yields typically are stagnant, they don't grow, and the high yield covers up some poor underlying fundamentals. So the 5 companies that I picked today walk that line. They pay a great yield. That's fantastic. But they also have strong fundamentals to back their business. Let's get right into it, guys.
The first stock we're going to talk about today is Johnson & Johnson. It's been a long-term staple of the healthcare community and trades for $135, roughly speaking, today. The PE ratio on the company is a whopping 267 points. It's extremely high considering the overall market. However, when you consider the success and the long-term growth and the continuing increasing of the dividend, Johnson & Johnson is a great stock to invest in. Now, if I were to invest in this stock, I would wait for a pullback. I would look at probably the 1-year chart or the year-to-date chart and kind of compare and see its highs and lows, and then wait for a pullback, which would bring it down near its lows of the year, and I would look to buy in there. It pays a forward dividend yield of 3.60 or 2.67%. Now, any increase in the stock price when you're really in dividend investing is just kind of considered a bonus because you're looking to hold these companies for 20, 30, 40, even 40, 50 years. So the 2.67% might not seem a lot in the first year, but trust me, on the 40th year, it really compounds and makes a huge difference. I truly recommend Johnson & Johnson on a pullback. The stock we're going to talk about today is Garmin. Garmin is an outdoor wearable company that makes a variety of devices for different individuals. Some for boats, some for backpackers, and then others for runners like myself. It trades for $68, roughly speaking, and has a 1-year target estimate of $62.50, which isn't great, but again, when you consider any stock appreciation, it's just a bonus. When you buy a company like this, you're buying it for the 3.13% forward dividend and yield. The PE ratio of 21.5 is actually very attractive at this number because when you compare 21.5 as a wearable company or a technology company, and you compare 21.5 to the overall market, it honestly is just not that expensive. I would recommend Garmin as a buy anywhere around the 1-year target estimate of $62 to $60. Next stock we're going to talk about today is the Coca-Cola company. It's a long-term staple of the stock market, and legendary investor Warren Buffett has bought and held this company for quite a while. I have owned this company in the past, but I sold it off in recent years. So, Coca-Cola, jumping right into it, has a PE ratio of pretty much 80. That is extremely high. However, when you consider the 3.47% dividend yield, it makes the company extremely attractive. It has a 1-year target estimate of $50 a share. And I honestly would recommend Coca-Cola. I bought it for around $42, and that's before it spiked up and then kind of pulled back a little bit to where it is now. So if you can get Coca-Cola around the $42, $41, $50 mark, I believe that's a great buying price, and you'll enjoy the 3.47% dividend yield as well as some future stock appreciation. I believe this company could be trading anywhere to the $55 by the beginning/middle half of 2019. And stock number 4 is PepsiCo. And yes, while Pepsi is a competitor to Coke, I believe both of these companies can have great success in the future. PepsiCo is kind of going through what Coca-Cola did a couple years ago. Coca-Cola kind of has transitioned. They switched their CEO, and now the new CEO has kind of established his roots and really begin to kind of explore his vision for the company. Now, PepsiCo just recently lost their CEO, and so now they're kind of in that transition period where the new CEO is coming in and kind of trying to take over the company and take the reins. So I believe this could be a possible choppy next year and a half for PepsiCo. However, the stock is trading at $112, It has a PE ratio of 34/35, which when you compare it to Coke's PE ratio, it's extremely cheap. It has a 3.31% forward dividend yield, which it's another great dividend, much comparable, only slightly less so to Coke's dividend, and has a 1-year target of $118.10. I believe I have a hold on PepsiCo. If you own it, great, don't sell it. But if you are out of the stock right now, I would not buy it until you start to see this new CEO come in, take over, and kind of see what his vision is for the company. However, I have very much enjoyed seeing PepsiCo kind of have Bubbly, their new startup flavored seltzer drink. I've tried that myself. It's very enjoyable. I definitely enjoy it. And you will too if you enjoy seltzer. But I want to see more kind of from the CEO before ever jumping myself into this stock. So the fifth and final dividend king that we're going to talk about today is AT&T, ticker symbol T. I saved this one because it's the best for last. AT&T is a company known by many, and it's known around the world. So AT&T is trading for $32 a share. It has a PE ratio of 6. A PE ratio of 6. That is extremely cheap. And it pays a crazy dividend of 6.26%. Has a 1-year target of $35.72. And I believe AT&T, while it is a telecom giant and is not growing nearly as much, if you buy and hold it for a year, you're enjoying a 6.26% return just in the form of dividends. And that's not even counting the share price. Now, AT&T has a lot of competitors such as Verizon, who also pays a killer dividend, and T-Mobile, which is also a publicly traded company. With everything going on with 5G, I really believe AT&T, as well as some of the other telecom giants, can be posed to make a great financial profit. So I recommend AT&T right where it is at $32 a share. I believe if you buy and hold, you enjoy a great 6.26% dividend yield, as well as some stock appreciation over the next, I'd say, 2 to 3 years in a big way due to their prominence in the new 5G networks that are coming out. So that's all I have for you guys. Thank you.
Thank you, guys. Please click the subscribe button right here. Throw me a like, throw me a comment. What did you think of this video? What's your best dividend stock? Thank you, and I will see you next time.